listen up, because I think this is one of the most important videos for a while. We are getting close to, we're at the end of the month, just coming into June, so we're getting close to first half of the year, and next month we are going to get a rate decision which could possibly see another increase in rates for the US. How can we decide if the market is pricing in a rate rise? We can look at the dollar versus the CAD, one of the key leading indicators, and you can see on this monthly chart here on the left, we have closed above this high from 2009. So that to me is very significant. We had a big drop from 147 roughly to 145 thereabouts, and here we are closing, engulfing the previous month's bar. So the markets appear to be potentially pricing in a rate rise. Now, most of us believe that these rate rises are going to be very, very small increments. However, a rate rise is a rate rise. So I think what we are potentially heading for is a situation where the Fed raises rates, and unusually we see gold continue to rise in the face of a rate rise, which is unusual, and we will see the markets rise with a rate rise. So why do I say that? Well, here's the Nasdaq, and here on the monthly chart that we've just closed here on the Nasdaq, we've engulfed the previous day's bar. Bit of a hangman here, so we could see this pull back to 45 still on the back of a hangman. Why? Because hangman tend to generate pullbacks. They sometimes can generate reversals for sure, but some people call them spinning tops. So in other words, the market was pretty fragile. It wasn't a convincing close. We didn't make a significant new high on a Monday. However, we are holding up, so I'd expect a pullback to potentially ramp down into 45, which will see a pullback in the monthly chart here nicely to last month's open, and then we could make a move into this 2000 high, at which point I think we will potentially see a correction. Okay, so looking at the US dollar CAD, looking at the Nasdaq, these markets are potentially pricing in a rate rise, and potentially going to see further momentum. We are, however, coming under this trend line here that was broken down on the 21st of April. So we've got a lot to do. If you look at the daily fibs alone, yeah, this is a potential sell zone, 45.30. Purely, or we forget all this price action here. Well, I don't forget this price action here, but just concentrate on the fibs alone. You know, if you've got a market that has sold heavily, there's the fib range, and then creeps back and sells in this zone, around this zone. We broke up above it, but quickly broke down back under it to 50%. If we cannot close above this, in fact reversal signal up here, then this could just topple over and roll over. So that's the threat. So tomorrow's close is going to be significant. And of course we've got non-farm payroll on Friday, ECB rates on Thursday, non-farm payroll on Friday. So that's what we're gearing up to. Okay. So charts I really like, despite the fact this Aussie New Zealand has come down. Again, looking at the monthly, 2 months lower closes, but we are still holding the 2008 low. We have this trend line coming across the top, which we're inside of. So I suspect we will move around in here for the coming few weeks, and potentially bust up. Okay, that's obviously that's a seller's bar. It's engulfed a few days price action, but I am still, I literally bought the dip, not quite at the lowest point of the day. I bought 680. Okay, so I'm topping up my contracts for this to at least come back to 108. Okay, same applies to this one. On the monthly chart here, the pound yen, we've closed under last month's range just, but we're holding 50%. So I think we could potentially move sideways. We may come and test 157. If we hold 157, then I think we could creep up to 180, 200, and potentially come all the way up to these levels up here. This is where we come from. This is the main trend line, and we are holding this monthly trend line. Okay, I'll draw that a little bit better. Concentrate on that high of August 207, and then you can see, okay, we haven't quite tested the trend line here, but we are above it. That's the point, we're above it. Okay, we've engulfed a couple of days of we've engulfed last week's price, is that right? No, we haven't engulfed last week's, but so we're holding this trend line, but we've seen a lot of heavy selling into the US session despite a bullish Euro session, and we are just clinging on. But the monthly suggests we could get bought on a further pullback into 156, 157, which is down here, and then potentially come and start testing these higher levels and stepping up here. We could, of course, all the time we're under this level here, all the time we're under 162, we could just roll over. So close out of this tomorrow, we could just roll over, but I think this monthly suggests that any dip into these levels here could get bought. Okay, right, so what else do I like? I like this Euro Yen. I think this Euro Yen is just clinging on, so we're just a narrowly higher close. ECB rates on Thursday, so we are clinging on to this 122, and I'll be looking to measure the after effects of the ECB decision on Thursday to see if that warrants a swing trade. I think, based on the daily, I think 12750 could get bought, and then we could break out and start attacking 125, 126, etc. Okay, so I like the yen pairs. They are battered. I like Aussie New Zealand. I think as we, already we've got. I say wow, we only got a 30-point push higher from the low of the day, but nonetheless we are already seeing some pressure to get above 107. So the potential to get to 108 and so on is there. Okay, let's look at gold. I think gold could easily come down to 1175, at which point I would be a buyer. So we've already seen we haven't quite seen a retest of the daily 200 because it quite narrowly missed it. We've got a hammer, we're closing above, so already getting bought here, but if we get a shock plunge to 1175, I'd wait to see some buy signals and then buy that to see if we can then start attacking these high levels of 15, etc. So short term, this week I'm seeing some upside. I would love to see a plunge to give me an opportunity to buy down here, at which point I'd hang on and look for some long-term contracts on that one. Oil, this is a nice hammer down here at 33.80, very close to 50, tipping over. A sell signal on the 26th of May, tipping over. I would like the opportunity to buy here at 46, at which point I think the mean average of oil is about 72 to 80. Could eat very easily, and the natural test high will be around 87, 90. I think we need to pull back first, but I think we will into next year. We will see these levels quite easily. So just to recap, I'm looking at greater strength in the dollar as we get it towards non-farm payroll. I'm looking for weakness in the New Zealand dollar, some strength in the Aussie dollar is the Aussie US. Aussie US has a hammer and a close above, so another retest of 72, which we're very close to anyway. I think any spike down into 71.50 I think is a potential buy zone to see if that can pull up. You can see we had 2 months of selling here, but we're back to a significant support area. So yeah, that's not a great monthly chart to start buying against, to start competing against. However, this daily chart does suggest the 72 could hold, and I think it's worth a try. So yeah, beware of this one because there is US dollar strength, and if I'm right, then this US dollar CAD is in for a big move, so any potential pullback to 130 is a buy. And we're only 90 points above 130 anyway. But I'm just going to be watching the M pairs very closely. Talking which, let's have a look at the US dollar yen, and we're sitting on this trend line. We've broken up momentarily, pulled back. So a test of 110 would be a great place to get in for a move up to 120 and possibly higher. That's a significant monthly chart there. Let's look at the fibs on this one. So we've got the fibs on the big picture here. So we closed into 124, sold off to 105.50, and we have a close above the 200 EMA here. Alright, I hope that helps. As far as stock sectors are concerned, with that Nasdaq performing so well, Apple has had a higher monthly close on a major support level. So Apple still looks as if we could be in for another wave of buying. We have had 1, 2, 3, 4. This could be potentially wave 5 to take us up to the 150 mark potentially. Let's look at Facebook. Facebook had a bit of a spinning top up there. So if this is the all-time highs, this is the all-time lows. Doesn't tell us much because it's still a relatively young stock. A pullback would be 112.40 to retest this big hammer here from January this year. Okay, I will leave that with you, and I look forward to seeing you in the next update. Bye for now.